You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to the next episode of The Whole Truth podcast. I'm Paul Armstrong. James Bay Minerals has been the talk of the town in the past week. The company has just acquired a big gold project in Nevada in the States known as the Independence Gold Project. It has a resource of nearly 800,000 ounces at 6.5 grams per tonne. The Executive Director, Andrew Dornan, joins us on this episode of the podcast to explain how they came to get their hands on this asset. Such a cracking deal when you look at the metrics and what they've paid. But most importantly, they're going to apply a formula that we see so much of today. Aussie companies and Aussie miners going to North America, snapping up overlooked and unloved assets, applying expertise and capital to create value for shareholders. Andrew Dornan and his team have got form. They're the team behind the Sun Silver Runaway Express. That stock went from 20 cents at its float to over 90 cents at the time of this episode. The stock is flying on the back of the same formula. Buy an asset, drill it, create value, and that's exactly what they plan to do at Independence. I think this is a very interesting episode because it shows what Australians can achieve for shareholders in North America. Andrew, if a week's a long time in politics, what is it in the resources business?
Well, I think when it comes to commodities and pricing, it's an eternity.
It's an eternity for James Bay Minerals, isn't it? I mean, the past week has seen you go from being slugging it out in the hard-fought lithium space to suddenly emerging onto the scene with this fantastic gold project in Nevada. It's a bit of a change in nature, but the market seems to have loved what you've had to tell them.
Yeah, it's a change in nature, but I think we're constantly looking at extracting shareholder value. It doesn't matter what the mineral or commodity is. If there's value in an asset, we're going to go after it.
Well, it would appear that investors agree with you wholeheartedly, wouldn't it? I mean, the stock has been on a tear.
Yeah, I think we're up over around 100% for the week.
Not a bad week's work.
Oh, definitely, but I think...
Can we expect this to continue every week?
Oh, I think so. I think there's still a lot of value on the table, to be honest. The asset we've picked up is tier one all class. So I think there's multiple value levers that we're looking to pull over the next 6 to 12 months, and it's exciting what's to come.
Well, let's have a look at the asset, as you say, that you've picked up. So the stock's gone on a tear. You've told the world that you've bought the Independence Gold Project in Nevada in Battle Mountain. What did you like about the project?
Well, we love Nevada. We're involved in another project in Nevada as well currently. But Nevada is a great jurisdiction to work in. It's consistently voted number one by the Fraser Institute. I think it's 7 or 8 times over the last 10 years. It's been the number one mining jurisdiction. It's extremely cheap to mine and operate in that jurisdiction. Reason being, it's soft kind of carbonate host rocks. I mean, this project, particularly the near surface, is high level epithermal, which you could compare it to like mining in a sandpit. So we love the jurisdiction and can see that it's going to be probably one of the hottest jurisdictions, given that some of the largest gold operators are in that area.
So let's drill down to it, if you pardon the pun. So it's got a resource of nearly 800,000 ounces, pretty well 800,000 ounces at 6.5 grams a tonne. You've done a two-prong deal, if you like, to buy 51% of it up front, and then you can earn the remainder over a couple of years. Is that right? Yeah,
correct. So the company we're acquiring it off Battle Mountain Resources, they had ownership of just over 51%, and then the earn in the remainder up to 100% over a couple of years, which is important for us to have 100% control of an asset. Holding 51% is great, but ideally you want full control to run the project as you wish. And so we've got, I think we paid just over 2.4 million in stock for the initial 51%. And then there's a 3 million, 1.5 million per year earning, and approximately another 2 million in split in stock and cash over that 2 years. So we've got a hold of it for just over $2 an ounce. And by the end of the earning, it will be roughly just over $4 an ounce. So looking at what the in-ground value is across the board at the moment, it's an exceptional transaction.
Yeah, it would have seemed to be that you've absolutely just about stolen it. But of course, the vendor is getting stock in James Bay. So they've got upside and a vested interest in your success.
100%. And that was important for us, is that we could see the value in where the stock is going to track over, obviously initially through the initial uptick we've seen, but also over the coming kind of 6 to 12 months as we play out where we see the value is in the asset.
Right. So you having control of it, in effect, up front means you're in the driver's seat, yeah? You're calling the shots.
Yes.
So what are those shots going to be? What are you going to do?
Yeah, so the asset's being drilled out in quite secluded areas, or because the intent was to get it up to indicated and measured for a starter heap leach kind of scenario. But as we've dug into the detail of it, there is significant opportunity to expand this near surface resource, as the starter pits which they have generated for this near-term heap leach opportunity are separate and never been drilled in between or outside to the east of it. So we see that drilling those areas is going to bring significant increase to our resource, as well as hopefully increase the grade of this near surface opportunity. In that area, some of the maps, if you look at them, the whole area is mineralised. So it's not as if it's a secluded deposit. These epithermal deposits are kind of disseminated through the limestone. So it would be highly unlikely that we would be drilling in these areas that haven't been drilled and come across nothing.
But anyone looking at this would say, well, if you've got a grade of 6.5 grams a tonne, why are you running a heap leach project? It's not all sizes are equal across this project, are they? Yeah,
so there's, probably to clarify, there's two parts of this resource. So the resource is actually 1.18 million ounces of gold and 7.6 million ounces of silver. The near surface has a measured and indicated of approximately 340,000 ounces of oxide ore, which is heap leachable. Then what sits underneath that is this high-grade skarn. So we've basically got an opportunity to have near-term revenue and profit through a heap leach scenario, which then will get down into the high-grade skarn deposit. So it's a very much a two-pronged approach.
So do you have a production or development plan, or you're really just about growing the resource to create the value?
Yeah, not at this stage. We see significant resource growth as our priority one, but also in the background there is an opportunity for a near-term heap leach. But I think it would be a bit negligent of us to go in the smaller style heap leach operation rather than upgrading the resource, because we see there's a few stones that haven't been turned yet.
So you're targeting presumably the more primary ore, the higher grade ore for the resource growth.
Correct.
And you'll leave the lower grade heap leach stuff sitting on the side as an option. Right. So when do you get into it?
So we've obviously subject to shareholder approval, but we're talking to drilling contractors currently. We're looking to get some geos out to undertake some field work pretty much immediately. So we will be loaded with news flow come through the end of the year and early next year. So there's no stopping us.
Are you armed and dangerous? You got the money to go and drill the holes?
Yes, we do. So probably one of the beauties of that soft kind of carbonate host rocks is it's extremely easy to drill, and we can, for a majority of the drilling, we can look to use RC drilling.
So where does this leave you with the lithium assets? People would sort of say, well, last time we heard from you, you were chasing lithium. What's the story there?
Yeah, so we're not pivoting away from lithium. I think is important to get out there is lithium is quite unloved at the moment. I don't think you have to look far to see that. And we've undertaken a significant amount of field work over the summer months in the James Bay area and generated a good amount of targets. We're still waiting on some results for some of that work, but we'll be looking to continue to undertake some of these field works over the next year or two to develop these targets. So when the market does rebound, we've got some fantastic drill targets to hit at that point. But if we were to look at drilling now, I think it would be a little bit negligent, as you're not getting reward for it. And if you're not getting reward for it, you're then going to have to raise at a significant discount and you're diluting shareholders. So diversifying our asset portfolio with an asset with a significant foreign mineral resource was extremely important to us, but we're definitely not pivoting away. We're just looking to diversify our asset
And
base.
you're prepared to play the long game on the lithium.
100%. And by acquiring this asset, building the value in it, it'll give us more opportunity for capital to actually explore further on those assets.
Right. And so the shareholder approval, when's this all come to be?
So currently targeting the AGM, which is the 29th of November.
And then that will allow you to fire the starting gun on the work on the ground.
100%. Yeah.
So it's going to be a busy, even around the Christmas period. Can you get into a drilling plan sort of over the new year?
Yeah, so we've got a fully approved plan. I could be wrong on the exact meters, but I think it's about 4 or 5,000 meters of drilling, which is all approved, ready to go. We've got existing relationships with drilling contractors in the region, and they're ready to go. It's just a matter of us telling them when. Yeah. So, it will be.
So you're not wasting any time. You're going to hit the ground running.
No, not at all.
Yeah,
we're not acquiring this asset to sit on our hands. We see the value in this and the blue sky potential, and we want to extract that value.
It's a different approach, though, isn't it? I mean, as we say so often when companies buy these sort of overlooked and underworked assets, as you say, your drilling is going to focus on the primary ore, the higher grade. So you get away from the things that makes market nervous, capex, startup costs, heap leach, can be notoriously problematic with metallurgy and the like. So the market doesn't have to worry about that. You're going to go in there and say, hey, we're going to add high grade ounces to the balance sheet.
Resource expansion across the board, high grade, heap leachable is the target. But I think comment on heap leach and metallurgy, it's proven in Nevada. Like 90% of the operations of all the big dogs, if you like, in the region are heap leach. So our neighbour is NGM, the Phoenix Gold Complex, and they're heap leaching, and they're roughly 1,000 all-in sustaining costs. So it's a hugely profitable operation. Heap leach has its stigmas, I suppose, but not in Nevada. It's desert land, doesn't impact waterways. It's very much tried and tested and supported in the area. So I think it's probably for us as an education process for the market on Nevada and how cheap it is to mine, process, and also that heap leach is not a dirty word in Nevada.
Yeah, it's probably had its problems here in Australia, but as you say, it's a totally different situation.
It is. It's completely different. You're in areas that are flat desert lands with no kind of surface water. It's tried and tested, and it's what all the large organisations do there. I don't think it should have the same stigmas as other places do in the world, and they have strict regulations on how you have to do it.
But you're also bringing higher grade to the project as well, so it's not
100%. So I suppose on the high grade portion, the 796,000 ounces at 6.53 grams per tonne, that is only roughly 25% of the property that was drilled for that. So other tenement holders around us to the north and the east have drilled this same skarn system, right? So this is a massive skarn system, which we've only basically got a mineral resource over 25%. So to the north of us has intersected that mineralisation. Once we drill through, we're expecting that we continue to see that mineralisation continue from the south all the way through up to the north of our property.
So there's already a whole bunch of drill results, isn't it, outside the resource? So you're chasing what pretty well open mineralisation.
Yeah, correct. So I think in the announcement we had that there was a pretty near surface. I think it was about 90 metres. So it's in that open pittable near surface mineralisation of 24 metres at 9.1 grams per tonne gold. So that's a significant intercept. And that was outside all the previous drilling and was never followed up or retested. So everywhere we look on this property, there's value levers to pull.
Well, it sounds like you've done a cracking deal, Andrew. I mean, you've got it for a good price. The vendor's still got exposure to it, and going to keep a handle in it. So obviously, they've got faith in the asset. But what investors will love to hear about this is that you've already got results outside of the resource, and you're going to chase them up with drilling in the near term. That's how people make money out of these projects, isn't it?
100%. So, yeah, I mean, all the drilling we're looking to do is, like I said earlier, it's being kind of in one secluded area, or two, for detailing a pit, ignoring outside of that. And some of the results that haven't been followed up are just...
It's becoming a very successful formula for Australians in North America. You think your stablemate, Sun Silver, which you've been involved with, picked up the asset, doing very well with that. Great returns for shareholders from what was a 20-cent float through to 90-odd cents today.
Yep.
So fantastic results. So you and your people have obviously got some serious form here and making money for people. It's worked well there. You look at what the Steve Parsons Group has done with Firefly, bought a Canadian copper asset, very much like this, mineralisation, open, well established. Spend money on drilling, bring capital and exploration expertise to the table, and chase it along strike and down dip, and hey presto, you create value. I think they've done the same with the Andean silver asset. That's flying on a very similar model. This brownfields exploration activity of Australian companies in North America is proving a very fertile territory. So
it definitely is, and I think it's where there's a mineral resource, there's always opportunity to expand it, right? And like we've seen with our assets in James Bay, grassroots exploration is tough and it's expensive, whereas we've pretty much been led to a island of gold with the Independence Project, and we're looking at the opportunity to expand that. Probably the North American, Canadian markets they're quite unloved, so there is a lot of great projects that just don't get any love. And you've also got in the US, it's not like Australia or Canada where all the information is readily available on government platforms. So you need to build those relationships with private project holders, and there's really some treasure chests out there, and Independence is one, and Maverick Springs for Sun Silver is another.
Yeah, well, you got some form there, as you say, with Sun Silver, so no doubt this will be closely followed. Thanks for your time today, and we look forward to maybe getting back in the studio next year when that rig is turning.
Oh, sounds great. Thanks for having us.
Thanks, Andrew.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.